Hello and welcome to Real Estate in Focus. When we are purchasing our first investment property that is considered as commercial, for example, strip plazas or apartment buildings that are 6 units or higher, if this is our first investment property, sometimes we think the mortgage is something similar to our principal residence mortgage. We have to realize that there is a lot of differences between these two types of mortgages. So we have David McGee that will help us to understand not everything, but at least the major differences between these two types of mortgages.
Yes.
Thank you for coming, and
thank you for having me, James.
Move on and explain how to understand the differences between these.
Absolutely. There are some substantial differences between residential mortgages and commercial mortgages. Virtually in every area there is a difference. So it's in the down payment. When people are buying a home, they're used to being able to put 5% down, 10% down. With commercial properties, that quickly starts at 20% and then quickly goes to 35%, depending on the type of property you're looking at. Mm-hmm. Interest rates are substantially different, and even interest rates on commercial properties can be substantially different. If you're buying, for example, a very nice multi-unit apartment building, you can actually get a lower rate than you could as a residential property if you're going through like CMHC insurance. Mm-hmm. On the other side of the spectrum, if you're buying something like an auto body shop or a garage, something like that, you may find it impossible to get any kind of normal financing, and you may end up having to go even with a private lender, possibly paying 9 or 10%. So the range in rates is extreme for commercial properties, as are the terms, the fees, the conditions. It really varies so much on a case-by-case basis, and that's, yeah.
So I'm trying to understand this. Basically, before they put an offer together, it is very important to have an experienced mortgage consultant on their side to understand, because I have seen some commercial deals all the way up to 50% down payment requirement. Absolutely. Which is a substantial amount of money if the price tag for that property is high. So it is important to understand these differences.
Yeah, it is. And I mean, when you're making an investment, I mean, in most cases these are investments that people are making. I mean, the amount of leverage available to you is important, and that's why it's you know, you have to look at that, because you may want to buy a certain property, but it may actually be more advantageous for you to buy another property simply because of the financing that's available to you. Because yeah, it can range from 20% as a down payment to 50%. So that's a substantial difference when you're talking properties, $1 million or more.
Right. Well, one of the other differences that I have seen is that the lenders are mainly focusing on qualifying the property as opposed to you as an individual. In case of a residential, your principal property is just the reverse of this. They focus more on your credit. So that's another, maybe sometimes an advantage, right?
Well, it does for some people. I mean, there's certainly a lot of people that are self-employed or are buying a business or a property to be used for business. Yeah. A lot of times they're writing off a lot of their income. They don't show a lot of income on their tax returns. So when you're getting a commercial mortgage, that really doesn't become as important as what is the income stream coming from the property. That's really what they're going to be focusing on, more so than on your personal, your personal income. They still do look at your personal credit. That's very important, because, and maybe in some cases even more so than on the residential side, because it's important to know that the person that's borrowing this money mm-hmm. is going to be able to manage that property properly and responsibly, and be able to make the mortgage payments on an ongoing basis.
Okay, thank you, David. And there you go. There is a lot of complex issues that are involved in commercial mortgages that may not necessarily be there in residential mortgages. And hopefully this video will help you to plan and prepare when you're buying an investment property. Thank you for watching.